We are covering the Employee Retirement Income Security Act, commonly known as ERISA, a topic you will definitely see on the health insurance exam. ERISA is a federal law that sets minimum standards for most voluntarily established retirement and health plans in private industry. For the exam, you need to know that ERISA governs employer-sponsored benefit plans, but not individual plans. Government plans, like those for public school employees or church plans. One of the most heavily tested concepts under ERISA is the fiduciary's responsibility. A fiduciary is anyone who exercises discretionary control or authority over a plan's management or assets. On your exam, a question might ask about the primary duty of a fiduciary. The answer will always be that they must act solely in the interest of the plan participants and their beneficiaries. This is known as the duty of loyalty. Fiduciaries must also act with the care, skill, and prudence of a reasonable person in a similar role. A common exam trap is to present a scenario where a plan administrator makes a decision that benefits the company, even slightly, at the expense of the plan participants. This is a breach of fiduciary duty. Next, let's talk about disclosure requirements. ERISA requires plans to provide participants with important information about their plan features and funding. The primary disclosure document is the Summary Plan Description, or SPD. You must know that the SPD is a plain language explanation of the plan and must be provided to participants automatically and free of charge. It should include details about eligibility, benefits, and the claims and appeals process. An exam question might test your knowledge of the delivery timeline. New participants must receive the SPD within 90 days of becoming covered. A common point of confusion is whether the insurance carrier's booklet is the same as the SPD. It is not. The employer, as the plan administrator, is responsible for providing a compliant SPD. ERISA also mandates specific grievance and appeals procedures for benefit denials. A participant has the right to a full and fair review of any denied claim. Exam questions often focus on the timelines. For urgent care claims, an appeal must be decided within 72 hours. For pre-service claims, the time frame is generally 30 days for a single-level appeal. The key takeaway is that ERISA establishes a formal process that must be followed before a participant can sue in federal court. A critical concept for the exam is how ERISA interacts with state insurance laws, a principle known as preemption. ERISA's preemption clause states that it supersedes any and all state laws that relate to employee benefit plans. This creates a uniform standard across the country. However, this preemption has a major exception you must understand. For fully insured plans, state insurance laws are saved from preemption and can still regulate the insurance policy itself. The exam trap here relates to self-insured plans. For self-insured or self-funded plans, ERISA preempts state insurance mandates. This means a state law requiring all health policies to cover a specific benefit, like bariatric surgery, would apply to a fully insured plan but not to a self-insured plan offered by an employer in that state. To remember the key components of ERISA, think of the acronym FDGP for fiduciary, disclosure, grievance, and preemption. Fiduciaries must be faithful. Disclosure provides the details. Grievances give a process for disputes. And preemption prioritizes federal law for self-insured plans. This simple phrase can help you quickly recall the core areas ERISA governs during your exam. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.